When does it make sense to start Social Security? And when does it make sense to delay? We're going to answer that today on this episode.
We hope you've been enjoying all the episodes from the Secure Your Retirement podcast. If you'd like to keep learning and receiving these episodes, then hit the subscribe button and turn on notifications by hitting the bell so you receive alerts when each episode comes out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Well, we're sitting here another day. How you doing today, Merce?
Doing pretty good. How are you?
Pretty good. It's that time of year where I love it. It's all the things are blooming. I love it. The flowers are out, so I'm excited. I love whenever I go on my walks and get to see all that kind of stuff. Well, I know we wanted to kind of talk about a couple different things, but I'm curious what you've been running into here recently when you're doing the what we call our financial planning strategy meetings.
Yeah, we had a pretty good one yesterday in one of these meetings, financial planning strategy, that we try to run at the beginning, first half of the year, to kind of set up the whole year. And the conversation became very focused on Social Security planning, and when is the right time, and do we take it now? Do we wait till 70? And so, the family came in with their opinions, but they obviously trust us to help them think it through. And so we spent a good 20, 30 minutes kind of walking through different types of scenarios. And I said, you know what? These are conversations that are happening all the time. And I think it could be a great conversation to have here today on the podcast, just because it is a big concern. You don't want to mess up that decision on Social Security. So that's kind of where that the whole beginning of this episode came from.
Yeah. So I think it would be good then for us to kind of like maybe lay this out or map it out, just so people got to have a clear picture. If you're already in Social Security, then you kind of know this, but maybe this will be one of those things where you go, I want to know if I did it the right way or not. And if you're thinking about Social Security, then this will kind of help you maybe think it through. So I think it's, what the question usually comes up when we're in these meetings is you're sitting with somebody who, let's say, is 60-ish years old, and we're building out the plan, and the questions usually come up with, hey, I can start my Social Security at 62. I could anywhere from between 62 and 70. Now, the reason why we say 70 is that it doesn't make any sense to wait till after 70. I guess very rare, because I get no more increases. I'm maxed out on my plan. So waiting to 70, some people think, hey, that's a really smart thing to do. But I guess you got to understand, if I start at 62, I'm going to get less money for the rest of my life from Social Security. And so the question comes out, should I wait until 70 so that I can get a bigger number? And I think it's important to kind of think through how we do that. So I guess maybe if you want to walk through a little bit, Merce, of just kind of like the setup here of what we're going to look at to help make this decision, what tools we use and how we do that.
Yeah. So, I think sometimes people, especially, they'll go to Google and ask the question of when is the right time to take Social Security. And the thing about Google or even ChatGPT today and any other AI tools is that, well, they don't know your financial situation. And so those articles and those AIs, they're speaking to the masses. And if you're speaking to the masses, well, the max benefit is at age 70. So a lot of times it points your answer towards waiting until age 70. Well, that could make some sense, but we believe there's a good argument to put your own finances, your own scenarios into play to help make that decision. And at the end of the day, the question that we ask is, well, how does Social Security complement our plan the best? Not how do I maximize Social Security as much. It's more of how does it complement my plan the best? And I think we'll talk more about that. But at the end of the day, what we're utilizing is tools and software to help us when we build out a financial plan. That creates this roadmap that gives us a basis to make comparisons off of. So when we have the plan built out, we can run different types of scenarios. And Social Security specific, we could run, hey, what if we take it now? What if we take it later? What are the impacts when it comes to cash flow, but also the impacts when it comes to our accounts? And if we take it later, are we drawing more on the accounts earlier? And is that problematic? If we take it earlier, how much do we have to draw to supplement Social Security to live the life that we want to live? And so, that's the type of evaluation that we're looking at. And what I tell people all the time is if you've done a good job saving and building up that retirement nest egg, all of a sudden comfort becomes an option and flexibility is built into the plan to where go to the opposite side. You've done nothing when it comes to saving and you have no assets. So, of course, the answer is you got to work as long as you can. And then when you're finally done, able to work, then you take it at 70, right? Because there's no other assets to complement your plan. So I think that's what's worth talking about here today, Raiden, is, let's talk about waiting and how that's become a bit of the default.
Yeah, I was just sitting here and I thought, I mean, we didn't do this in preparation, but I was like, I'm going to ask ChatGPT, when should I take Social Security? I like the opening line, though. It says, this is one of the most important financial decisions you'll make. And the right answer depends heavily on your situation. Mm-hmm. And then it gave a nice dissertation. But I think the default has been, if you were to go out and Google or do what, talk to somebody who's just giving there's been lots of articles written, and the default has been wait until the last minute, meaning you delay it. But I want to give context to those articles and give context to what's being said a lot of times. Now, when I just did that Chat GPT, that's a little different than what we used to have with Google with the articles, because it's going to help. It does say we need to look at your situation. So there's accuracy in that part of the deal. I didn't read all of what it came out with, but here's the thing. Articles that get written, or when I'm talking to a mass audience, I'm usually answering the question for the most people in the audience. Okay. Now, we have a very different audience here on Secure Your Retirement Podcast. And what do I mean by that? Well, for the most part, people that listen to this podcast have been good savers. They've been able to put money into their 401ks. They've got brokerage accounts, and so they've been able to accumulate money. If I were talking to, though, folks that have not been good savers, which unfortunately, from a population standpoint, is the majority of people today. The majority of people have not been good savers. We get a little skewed sometimes in our world because all we do is work with good savers. You don't really come work with Peace of Mind Wealth Management if you've not been a good saver. So our language around Social Security is very different. But if I were talking to a mass amount of people who had not been good savers, I am going to say, wait until the last minute. Why? Well, because they don't have anything else saved up. And I know that means that you might be working later. I understand that it's going to be more difficult for you to be able to think about retirement. And those are all things that we could debate and talk about on a separate podcast. But for that scenario, wait to 70, because I need the most money I can get for the rest of my life. However, if I have been a good saver and I have other money, well, now that whole circumstance changes. And I think that's just an important thing for us to think about. So there are some scenarios that we'll talk about here in a minute, but Mers, I'll let you kind of hop in here on that particular topic on why it's been the default or how we want to kind of build this out.
Yeah, I think to add to why it's been the default is a lot of times you'll hear the phrase of, well, where else can you get a guaranteed growth rate of, roughly about 8% every year that you wait from 62 to 70, Social Security grows by 8%. And it's basically guaranteed. Now, I think that guarantee feels more up in the air today than it did 10 years ago because of where Social Security's at and the issues with Social Security. But that was kind of the framing. Where else can you get a guaranteed rate of return like that? So that was to push the conversation of it makes perfect sense to wait, spend your assets and wait and get this guaranteed growth rate on your Social Security. But, I think there are times where it does make sense to wait, even with the families that we work with. We see it from time to time, a couple of different types of scenarios that come around where, we've got someone that they'll walk in and they say, my mom and my dad both lived to 100. I've got longevity in my family. I've got a crystal clear bill of health. And I know this term of break even comes around when it comes to Social Security planning. I know that I can beat that break even point of if I wait till 70, I have to live until, say, age 87 or something like that to break even on not filing earlier. And I know I can beat that math, right? And so that can make good sense at times. There's other scenarios around spousal planning that could make a good amount of sense. I think we'll come back to. Or you've got someone who's loves what they do, or they're working, right? Or they're generating some element of income that's providing a good amount of cash flow. So then those circumstances kind of start to point towards, well, why not wait a little bit longer? If we've got good cash flow, we've got good income, or we're happy doing the job we're doing, we don't feel like we're in this work optional type of environment. So why not delay Social Security and get the bigger benefit? But I think spousal planning, Raiden, is a really good one. That is, it doesn't come up that often, but I think there are times where it makes perfect sense to think about the spouse or the surviving spouse when it comes to Social Security.
Yeah, I think there's a couple different reasons to wait, but we can hit on that one for the spousal planning there for just a minute. So let's just paint the picture. Let's say that I'm married and I've been the higher income earner. And by the way, when I use the word you could be either one of the spouses that are the higher income earner. But whoever is the higher income earner, let's say that they also happen to be older than the other. So let's just, for easy math, let's say there's a 10-year gap between the two. Well, what that tells me is, especially if it's the male who is the higher age, right? They are less likely to live as long as the female part of the relationship. So that already is kind of tagged on. And so what would I do? I might want to wait to 70 so that I have a larger benefit. And here's why: because my spouse is going to get that amount. The way it works is that whenever one person of a couple passes away, the surviving spouse does not get both Social Security payments, but they get the higher of the two. So what I'm doing by waiting is I will wait so that I can actually have her, or this, let's say whoever the lower income earner was, the bigger benefit, because they're going to get it much longer. Now, this could play out in a couple different ways. Let's go to the scenario where, let's say that I was a much higher income earner. I'm working until I'm 65 or 67 or whatever, but my spouse goes ahead and maybe they start taking it 62. They start taking their Social Security because we're mentally kind of going down this path that they're going to inherit my larger amount. So I would wait till 70. That could be a strategy that we would need to think through. I think there's another one, though, and I can't remember, Merce, if we kind of talked about this or not, but I guess we did, on the tax strategy. Like, if you want to kind of hit on that,
Yeah.
because if a person's thinking about a Roth conversion, there's another reason to wait.
I've got a great example on this. When we had a family come to us and became a new client of ours because they hear about what we do, financial planning, and then tax focused strategy meetings and everything like that. They had come to us. This was probably a couple years ago now, she had already turned on her Social Security. And when we're going through the financial planning process, it becomes very clear and evident that one of her major goals is for legacy planning, and she wants to leave behind tax-free assets. One of the most common ways to do that is through this thing called a Roth conversion. We talk about it all the time. It's a tricky thing to do. You got to pay attention to a lot of things when it comes to taxes and Medicare and all of that. But the gist of it is that is what she wanted to really focus on over the next few years. Well, the thing about Social Security is that it is taxable. And so she had just turned on her Social Security. It was adding to her taxable income. While it's not fully taxable, the majority of it is taxable, up to about 85%. And so what dawned on her as we are going through the tax strategy meeting with her is that, man, if I just didn't have this Social Security income, then my income would be lower, which allows for me now to do more conversions in the next few years. And so because her priority was legacy, not cash flow, her priority was legacy and Roth conversion planning. What we ultimately decided to do, which, it was a pain, it was a headache. So I encourage you to think about tax strategy, to think about your goals before you make any decisions around Social Security. What we ended up doing is reversing her Social Security, which you can do. It's a tougher process, but you can do it. We reversed her Social Security so that now that income comes off of her, and we're able to utilize a lower taxable income to do more Roth conversions for a certain period of time. So really, that I think could be a really good reason to delay Social Security if we're proactive about it. If we say, hey, our goal is tax planning, tax strategy, Roth conversions, tax-free life inheritance, all this stuff. well, it could make sense to delay and keep our income as low as possible so that we'd have the ability to convert even more over some coming years. And then you turn it on later, and then you get the added benefit of it grew while you were doing conversion planning. So I think the key takeaway there is that waiting in general works best when it fits into the broader plan. And what's the broader plan? Well, it should be goals driven by you. What do you want your retirement to look like, and what do you want your legacy to look like? And all the pieces then start to fall in between. So we talked a little bit about why waiting could make sense. There are reasons as to, and this happens more than not, I think, where waiting doesn't make sense. And let's go ahead and turn it on, Raiden, right? So, what are some of the scenarios that you've seen that we've said, let's just go ahead and turn it on?
All right, so let's walk down the scenario, and I'm going to give you the one which would be the earliest, because sometimes people go, well, I should never turn on my Social Security at 62. So let's walk down a path. Let's say that I have a family that I'm working with. They are both 62 years old, and they have been really good savers. They've got a good amount of money over in their 401k IRA. If you want to, I'm going to give you some context. Let's just say I got a person who's got $1.5 million between the couple. $1.5 million, $2 million in their 401k IRA. I know sometimes when I say that on this show and it gets on YouTube, I get all these comments. Who in the world has $1.5 million and $2 million? And that's, again, that comes back to the mass who's listening. But for our audience, that's not uncommon at all to have $1.5 million, $2 million between a family and 401k IRA money. And then let's say they've got some other brokerage money, and let's go ahead and throw it out there. They got another $1.5 million in brokerage savings, those kinds of things. And they're going to retire. And so they go, okay, I now need money to live on, right? Because they don't have income anymore because they're going to retire. And so the question comes then, when should I take Social Security? So if you run that math and we put it into our financial planning software and we show it all the time, and we do one scenario where we're just going to take money from savings, and we don't care, we just don't worry about where we're taking it. We're just taking it from savings, brokerage money, savings in the bank, whatever. We're not trying to do conversions. That's not on the radar of what we're trying to do right now. And we're going to take that money and we're going to live on it. And we need whatever the amount of money we need. We're going to take it from savings, and we're going to delay Social Security to age 70. And then we go run all that math out and we go, what do we have left at age 90? Okay, so that's one way to do the calculation. Then we come back and say, okay, well, no, we're going to start Social Security now so we don't have to take as much money from our savings, which means it's going to be a lesser amount than if we wait to 70. And then we run all that math out, and then we say, how much money do we have left at age 90? We run everything the same. We do COLA adjustments on the Social Security. We run the same rate of return. We do everything the same. And then we say, what do we have left at age 90? Here's the interesting thing. A lot of times we're going to have a little bit more money at age 90 because we took Social Security at age 62. I don't care, though. Let's just say we had the same amount of money at age 90. Does it not then make sense to go ahead and take Social Security in most cases? Because when I do that, I'm going to have more of my money left, or the same. That means I don't know when I'm going to pass away. I go ahead and lock in the Social Security. That's the way I think. That's the way our clients think. Now, here's the thing. For the arguments around this, what if the spouse dies? Our software does that, and we play the what ifs all the time. And we say, well, when is it going to be the worst if the spouse dies? Early. So let's make the spouse die at age 70, at a very young age today. They die at 70, and we run those numbers out. The numbers still come out to most of the time being the exact same scenario. I've got the same or more money at age 90. So we always are saying, hey, if that's the case, now we don't make those decisions. We just show the math. And then here's what most people say in that. Most people at that say, hey, you know what? If I'm going to have the same or a little bit more, I'm going to go ahead and take Social Security. That's their decision, and we've proved it with math on that. So yeah. I think that's just a good way. I don't know if there's much more that we want to talk about on this, Merce, but I think we've hit the main topics of this idea, and obviously there's a lot more we could discuss.
Yeah, I think, to bring it home, when it comes to Social Security planning, there is no one size fits all decision here. Just like with investment strategy or financial planning, those need to be very individualized and catered towards you, just like the Social Security decision should be. So it's not wait till 70. It's evaluate your scenario. And if you don't have someone that can help you do that, we're happy to help you understand what that process looks like with us. And there's a lot of different factors that go into it: longevity, tax planning, goals-based planning, the numbers and the math in itself. And then also there's this one that's in the back of everyone's mind that has had some weight here in decision making as well, as far as, well, what's the future of Social Security, right? The nice part is that if you're listening, very likely you fit into that demographic of the good saver type of demographic, and just know that you've got options, right? If you haven't saved, like Raiden said earlier, and we don't have assets to support us, well, then you don't have much option. You got to wait, you got to work, and then hopefully make it to 70 and then draw at 70. But when we have assets and we've done a good job of proper planning, there becomes tremendous flexibility that allows us to make decisions based off of not just math, but also comfort, and with this whole driver of creating peace of mind and reducing stress in retirement.
All right. Well, if you have any questions and maybe you would like to see your numbers and see how that plays out, feel free to go to our website, pomwealth.net, and go to the Contact Us page and schedule a call. And we can talk about your specific situation and go, does it make sense to take it now? Does it make sense to wait? Also, don't forget, we do have our book out, The Peace of Mind Pathway. You can get that right on the website as well. Or if you contact us, we'll just send you one. How about that? And then it doesn't cost you anything. So reach out to us if you'd like to get a copy. We hope you have a great week. We'll talk to you again next Monday.
If you would like to find more information about Peace of Mind Wealth Management, we invite you to visit our website at pomwealth.net. If you go to the contact page and contact us, we'll send you a free copy of our book, The Peace of Mind Pathway. It lays out our process from beginning to end. Please visit our website.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.